In this video, I want to show you how the higher time frame could essentially got you into this long position today. Today is April the 24th at $18,965, let's call it. And you would have essentially been able to ride this up to 19,300. So over 300 points worth of potential upside. Realistically speaking, today was one of those days where you kind of just closed your eyes, clicked buy, come back to the charts and made money, right? Now, it always seems a lot easier in hindsight. Obviously, looking back at this market, it definitely shows that you should have been a little bit more long biased. Surprisingly enough, I did take two shorts in this market today. They both did pan out. They, were a little bit sweaty because, I was going against a trend. The majority of the work that I did in terms of trading today was done very, very early in today's session. I came in today with a bias. If we kind of look at this dotted line on my chart, this was an area of pre-market yesterday and an area that we lost yesterday intraday that sold off into the 20-day moving average. So I came into today thinking that if we pushed into 18,965 and we kind of failed that supply zone, potentially we could pull right back and double test 18,710, which was our daily 20 SMA. That didn't happen. Prime example of how you cannot come into the day with a particular bias or something, a narrative that you would like to see play out and kind of stick to those guns, because if you do, you'll miss out on a fantastic opportunity. So I didn't get the opportunity to take that short at 18,966. However, on this 15-minute chart, it was a very strong 15-minute candle, followed by a candle, another 15-minute candle that completely takes out the range over 19,000 or 18,966. That's right here. Okay. So I was looking for a rejection in this area to maybe play this back down, right? That did not happen. So I cannot marry that bias. But once we confirmed, I had to go long. And realistically speaking, a lot of the money was made on this particular candle. Now, I wish that I would have held it all the way up, right? But, things are always perfect in hindsight. And the farther we got into yesterday's highs, I was imagining that, there was going to be some level of resistance here where maybe this can pull back to 18,966. That never happened, right? That never happened. But I did find a short position once we got into my weekly key level here at 19,255. We broke this area, we pulled back, we failed to make a new high, and essentially I just shorted this candle right here. Again, it wasn't a lot. It was 25, 35 points, around 30 points when it was all said and done. But got out of that trade. Again, I know that I'm going against a trend, so I'm not looking for this to do some 100% reversal. I just got to take whatever cash flow that is left on the table. And then, market continued to push higher, 19,323. So market looks in a very, very good spot. Essentially, tomorrow's trading to end the week is going to be very, very simple. If we confirm 19,325, you're going to go long. You're going to have room into about 380. You're going to have room into 400. And that's going to kind of be breaking and solidifying this downtrend, this short-term downtrend that we've been in for the better half of a couple of months. And maybe the market begins to hold, right? If you see us gap up tomorrow and we are trading over 19,325, last thing you want to do is chase that long into this supply. If anything, allow for an hour candle to close and a new hour candle to confirm the highs. If not, there will be a short opportunity back into 19,256. Any loss below 256 tomorrow definitely has room into yesterday's highs, which is sitting at 19,150. I would expect this area to try to hold up as some support because it did chop around here. This gray box, when I was on a live call with Evolution Traders, we were talking about this is the no trade zone. Don't go long, don't go short here because the market's indecisive. The market can go higher, the market can roll over. So this gray box, when we were watching a 2 and 5 minute time frame, I said no trade zone. Do not go long, do not go short until we break the top and confirm, or break the bottom and confirm. And sure enough, when we broke the bottom to confirm, we were only expecting it to come up to 256, which we did catch a little bit of a move there, but again, it went a lot higher than that. So with that being said, again, the trade of the day was here. Now, if I go into, let's say, a 2-minute chart just to kind of get into the nitty gritty of that particular situation, I will show you exactly where I wanted to go short. Okay. I will show you, and then I will show you where I got no confirmation and ability to go short. Okay. So if we look at the push into 18,966, we look at that push. We look at the following candle put in an inverse hammer. So this candle here signified to me that there's potential short opportunity. If, okay, and here's the big if we can get a following candle to close below that hammer candle. Now, at one point in time, we did wick below. But again, patience is going to always be your best friend until I get that closure. Okay. Until I get that candle to close below my inverse hammer, I cannot do nothing. Okay. If this candle would have closed below my inverse hammer, I would have used that swing high over the wick as a stop and potentially ridden this all the way back down into my rising support, which was my 20 SMA, or even more, targeted that daily 20. When this candle did not close below, I told myself, if this market takes out highs, it has an opportunity to fly into the next demand zone or next supply zone. So as soon as we took out those highs, okay, as soon as we took out those highs, I went long, little bit of consolidation here, and then absolute explosion. And I think I sold the most of my work here between this 2-minute and this 2-minute candle. But again, if you kind of look at this price situation here, getting in at a price, over 18,990s and selling at a price of 19,025, 19,034 is a 45, 50, almost 50 point move. Okay. In just a matter of 6 to 8 minutes here. So with the size that I was trading, it was a pretty good, decent size trade. Now there was one more opportunity that I found here, which was a flag pattern. So once we got this hammer candle, inverse hammer candle again, my brain is always going to go to thinking this could potentially be the pullback, right? So potentially we can get this breakout, we can get this retest, consolidation, and then either a continuation, or we get this breakout, we get this consolidation, this back test, lower high, and then rejection, and that would signify me to go short. Now, I drew this flag out. And when I drew this flag out, I did not take this short position because, again, we have a very strong trend. But I had noticed that we were still trading over this 20 SMA. And we pulled back, we chopped around, we consolidated. And then as soon as I was able to get 2 touch points here, I told myself very simple. If we can break this flag, I understand yesterday's highs is here. Maybe we go grab this liquidity at yesterday's highs. I got in here, I sold here. Again, I'm not a big time holder, guys, especially with the volatility, and I'm trying to take more profits off the table. But realistically speaking, because of the range, getting in at a price of 19,100 and selling at a price where we're trading up to 19,128, this is over 25 points for me. Okay, and over 25 points for me is at least $200 to $300 on the position size that I trade. So being able to capture a little bit of a scalp here for $200 to $300, being able to capture a little bit of a scalp here for $300 to $400, it was closer to $600 to be honest on this trade. This is a really good day, and now you're starting to play with house money. So again, here's my no trade zone. Once we broke out of this no trade zone, we did take a little bit of a long here. We got pulled back on, again, still held the top of the no trade zone, and then pushed into that supply towards 260s. Again, kind of take your profits on the way up here. I believe a lot of us took our profits on this little wick here. Once we got up, again, we were up from an entry price over 215. That was the level that we were looking at, was 19,215. I got in a little bit late. You can ask some of the guys that were on the call. I was about 5 points late to that because I was looking at another monitor. I'm looking at the daily chart. I'm telling myself, wow, today's volume. I'm looking at the volume. I'm looking at all kinds of stuff, and then sure, lo and behold, we're breaking the price. But again, 5 points late, no sweat, right? I mean, again, I know that I've got to hold this level. I'm above my 20 SMA, so we do have some house profits on the table. So getting in over that 19,220 mark and then selling into 245s was about a 20 to 25 point move there. So again, decent trade, picking off 20 to 25 points. If you're able to extract 50, 75, 100 points out of the NASDAQ 100, it can turn into be a really, really good trading day. So with that being said, just kind of going over some of the setups that, I personally took today. It was very easy to kind of tell yourself the market can't go higher. I mean, there was a particular time here where I told myself, okay, finally, we're going to hit yesterday's highs and we're going to pull back, and didn't really happen, right? You just have to trust the chart. And, the period in time here where, I was really stressing the guys, like, don't trade this zone, right? Clearly we need to break down. We're at yesterday's highs. We are holding this, market's got potential to go higher. Market also has potential to, drop. So we need to see which side's going to confirm first. And it was the long side. So, you want to stick with that bias. It is as hard as it is, right? As hard as it is to stick with that daily bias, right? And keep telling yourself that even though the market is up 200, 300, 400 points, the market doesn't care, right? It doesn't care if you think it needs to come down. It doesn't care if you think that it's overextended. The market's not oversold or overbought until the market decides when it's oversold and overbought. There's a lot of people that always say, oh, we're overbought. Market's got to come down, and you keep getting squeezed out of positions, right? Market's down too much, we've got to go up, and the market just will continue to go down. So just try to do your best to stay patient, trust your levels, and again, allow enough wiggle room in this market to be able to absorb some of the the ups and downs. Again, if you're trying to sit there and trade multiple mini contracts, probably not going to be the best thing for you, just due to the fact that the volatility is the ranges are big, right? It's not easy to sit in this market when you can get 30, 40 point snapbacks. So I would recommend trade between 2 and 5 micros. I think you'll suit yourself well. I think you'll be able to catch a couple of 20, 30, 40 point moves where essentially you can just kind of lock it up on the day. If you happen to be wrong and you're wrong 30, 40 points, what's the most damage you're going to take? A couple $100. So, it's not the end of the world. You're not going to lose your account over a couple $100. It's okay. With that being said, guys, make sure to like, comment, subscribe. We're really close to 10,000 subscribers here on YouTube, so make sure if you're not already subscribed, subscribe to the channel. Also, we've got about 7 hours left of Apex's 90% off sale. You can use code DAnthony to lock those in. And if you guys want to join the Evolution team, where you guys get access to multiple live trading sessions a week, access to the community and my courses, that link is down in the description box below, and I'll catch you guys on the next one.